So today's Ag Economic Dialogue session, we have Nacasius Ujah from the Ness School of Economics and Management at SDSU. And also Jack Davis is going to present for us as well today. So I'm going to just kick this off so that they get their full 30 minutes of time each. We will do the presentations, and then we'll stop recording and have time for questions afterwards. So with that, Nacasius, if you want to take over, I will give you control, and we'll look forward to your presentation.
Well, thank you so much, Heather. Thank you all for the privilege and as well as the opportunity to visit with us. As Heather mentioned, I am on faculty here at SDSU in the Ness School of Management and Economics with Heather, Jack, and as well as Matthew. My name, as said, is Nacasius Ujah. My area is in corporate finance and international business, but my research hovers and dabbles into working capital management. So the title of today's presentation is In Uncertainty, Working Capital Management. And I think for us as farmers or in the farming industry, no better industry overall. You will always remain as the true lifeblood of any society. Thomas Jefferson had this to say. He says, agriculture is our wisest pursuit because it will, in the end, contribute most to real wealth, good morals, and happiness. And I just want to just echo that regardless of what is happening, no industry is in a better place to really fuel the economic vitality like the farming industry, broadly speaking. And so this, again, is just a national data, so to speak, in terms of the state of working capital. So in the farming industry here in the United States. Greatly, we can see that it is dwindling, and that dwindling in particular brings or ushers in a lot of concerns. The concerns not just from you, the farmers alone, but also for the banks. As depending on what your loan structure is, the need for you to either refinance, the need for you to either go back in to call them to sit on the table with you to renegotiate becomes even much more paramount. That ratio continues, as we see also in this slide, that on the national scale, all things being equal, our current ratio seems to be dwindling in the farming industry, and as well as the working capital ratio. Always the rule of thumb, depending on a number of people, they'll tell you that, okay, well, you need to have a working capital ratio at least that is healthy of about 0.2 or at least at about 0.3. And so as we can see, the numbers are not necessarily looking good for us. Not still a bearer of good news because overall, again, on the national scale, we can see that our return on assets have not necessarily been looking that well as compared to, say, the year 2012 and so on and so forth. And again, this is on the national scale. The real capital returns for farmers, relatively speaking to its current income, while the current income seems to be rising, but in actuality, that capital returns still seems to be dwindling. It remains a concern nationally. Then here we pivot to say, okay, well, let's take a look at South Dakota as a whole. While some of those data can be a little bit noisy, we're able to kind of, clean out a few facts, particularly for South Dakota, to say, okay, well, how are we faring, we in South Dakota? And on this scale, the emphasis is just look at, the net farm income, relatively speaking, to the total production cost. Ideally, in any of these years, the years that may look like the year 2018 is one of the years that we would hope that kind of really that trend continues, or maybe what we see in the year 2011, whereby we basically really see that the change, so to speak, between the year 2010 and 2011, when it really boils down to the total production cost as against the net farm income, there's that huge disparity. And so for us, or for you, the farmers, or in the farming industry, these are some of the numbers that we would be hoping. The year 2020, the change between 2019 to 2020 isn't really that bad as well. But again, overall, an aggregate measure from the year 2010 to 2020, we can see that the dip, or the change, so to speak, particularly for net farm income as against to total production expenses, that margin, it's no longer as huge, of which that can be concerning, particularly from the lending structure. Here we go further to say, okay, well, let's take a look at South Dakota again, and to say, in particular, looking at the value added by these farms as against the change in the value added. So the farm value to its gross income, again in blue, and then the change in the value added. Overall, there seems to be a slight, a good picture for us here in South Dakota, maybe as against the national data, which again can truly, hopefully highlight that there is hope. Uncertainty remains. Everyone is still concerned about the state of the economy, be it what is happening now, regardless of your political alignment, be it what may have happened in the past. And also, of course, we're always wanting to think forwardly about what could happen in the future. And so empirically, in different research, there are a number of ways that we can capture the uncertainty in the economy. And these methods, at least that here, that basically hovers from your implied stock market volatility to your consumer sentiment index, and as well as using basically a linguistic machine learning methodology to try to extrapolate a set of concerns that have been echoed across different literature, across different news outlets, across different newspapers, and so on. And given the last methodology using machine learning, we can measure uncertainty to kind of really show that all across there is uncertainty, but once the uncertainty level, literally speaking, jumps above 100, and the 100, it's this particular line right here that you see. If we were to drag that on a monthly basis, we can see that the uncertainty level in our country is quite high. How does that uncertainty play, or what role does it play in our finances, or in our business operations, in our yield, where nature may also have its own concerns there. But regardless of, we can see that broadly speaking, in this case, the uncertainty isn't decomposed. In other means, one can easily decompose that to really look at it, from different aspects in the country or in the nation, and perhaps maybe those. But at an aggregate level, we can see that the level of uncertainty is still quite high. And given all of this uncertainty, what does that really mean for us as these farmers, for us as the businesses, as we think about renegotiations, as we think about going back to the table with the banks? The banks are equally keen and aware of the value added that your business brings in. They are equally aware of the value of the estate which you are managing. And so bottom line, do not rely on just one person or few people to tell you exactly what the state of your finances are. You need to have an insight in that. And so, a question perhaps that I will probably raise to all of us is, do you know your finances? And we here at SDSU, we are available to really help in some of those areas, understanding, particularly speaking, the drivers of your business. And I think a number of times we're equally keen and aware of our soil productivity, of the climatic conditions, but beyond these drivers, what are the other drivers that can truly upend or create or accelerate a decrease in your business operations? What does that look like? Be strategic in your business expenses, particularly as we really think about the cost functions of businesses. A number of financial institutions, to a certain degree, are also equally aware in terms of what those business expenses are. And some of those business expenses could be, put mildly, but could be unwarranted. And some of those unwarranted costs at times can become a huge challenge. So be mindful of that. Banks understand that the uncertainty is real. They see that, they know that, they keep track of that. And even if, assuming if they do not have a direct contact in keeping track of the uncertainty in the nations, bankers have a number of people that are glued to what the Federal Reserve is saying, or files or documentations that are coming from there. A number of them, because of their investments in the industry, in the farming industry, they are also well keen or try to be informed in terms of what is happening in the industry. So they understand that this uncertainty, the concerns, broadly speaking, is real. And because they understand that, know that as you enter into that room, you also have the means to negotiate. The negotiation is not a one-way street, meaning it is only them that dictates exactly what that rate should look like. You have something to offer. They are well and they are mindful of that. Let the negotiation take place. So leverage that, right? Negotiate, leverage, and negotiate. Bottom line, for us here at SDSU, we're here to really help. However we can, either from the research collaborations or from a consulting or from an extension aspect. So thank you so much for your time, and I will hand this over to Jack.
Okay, thank you very much. As we mentioned, we're going to hold questions till the end. We'll stop the recording when Jack is finished. So if you have questions, you can ask them at that time. So with that, Jack, if you want to unmute and take over the controls.
I'm unmuted.
Okay, I can hear you now.
Yeah, I was trying to get to my video. I'm doing everything a little bit backwards.
Okay.
Yeah.
Looks like you're ready to go, though.
Yeah, we're ready. So we'll talk about land values, and this really going to fit in what Nacasius said. We'll take a look at how our input prices have increased too. And we've heard of some really high land values and sales taking place recently, not just in Iowa, but some also taking place in South Dakota. So we'll take a look at what the return might be on those. But all those things add to that risk that he was talking about, and the importance of knowing the drivers of the business and where you're at leverage wise and financial wise. So there's just the contact information, cell phone or email, office, either any of those will work. Oh, I know what I need to do is I was going to paste a link to our survey into the chat so they would have that. So we just
can do
came
that.
out recently with, do you want to do that, Heather, or should I grab it, or?
I'll grab it quick while you
Okay.
start.
Yeah,
writing.
and then they'll have it. Yep, that works. So this just took some pieces from our ag land survey. Now think back, this survey takes place in February. So we showed about a 5% increase in land values over last year. I think as we move into this fall and the sales and the things that we've been hearing, that's probably going to take another pretty good jump this year. We did show, according to the survey, a little bit decrease in pasture. I would say, you know, that might be somewhat just noise in a survey, and those values probably held close to steady, maybe up or down just a little bit, but probably not much change in the pasture land. I think that's kind of indication of the economics of the livestock industry or cattle industry, and also then the farming industry. So just a long-term chart of our survey values. And as we can see here, we kind of peaked like this around 13 or 14 was kind of our peak in showing land values. And I'm going to also share South Dakota Ag Statistics or National Ag Statistics stuff too coming up. So that's kind of when we peaked. You know, we just went into a time period of very tight margins, maybe concerns of interest rates going up, and they just, you know, they maybe went up a little bit, but they really didn't take off. And then in 20, we had in 19, we also had disaster payments, ad hoc disaster payments that came through, saved the cash flow, probably helped to build working capital back somewhat in the farming industry. And just interest rates have really stayed low. So kind of a uptick now in at least the cropland values here in 21. This is just a gross rent to value ratio. So we're not taking out any property taxes, and it's what's reported in the survey, the rent. To qualify to enter into this, the surveyants have to enter both a rent and a value. So those are matched up with pasture land, rangeland, or what we'll call all grass, and the non-irrigated cropland. And in talking, we just recently had the Land and Lending Conference down in Sioux Falls, and talking with some participants there, I know we're showing a 3.5 here on ours. They said some investors, due to the long-term growth in land values, they're willing to take a kind of that cash return below 2%. So that may be some of that that's taking place as our land values are bid up here. And then just looking at the Ag Statistics one, kind of the same pattern, that 14-15 time period for a peak on our cropland values. This will gradually decrease into 19 or 20, and then just picking up here a little bit in this last year. Past year kind of went up to that $1,100, $1,000 range, and it's just really stayed kind of flat. Part of that may be that you know, it went up, and some of that would have been being converted back in here, so that might have had pressure to raise it up. But these are just anecdotal comments, and now we're getting more to where much of the pasture is probably going to stay in it grass in South Dakota. Just an observation. Comparing South Dakota's NAS, the their cap rate versus Minnesota Fed fixed land rate. Oops, I did not mean to do that. There we go. My speaker view is blocking my slide. So really just, it does kind of follow that, the Fed fixed rate that stayed fairly flat. But yeah, just wanted to give that observation also. You know, the other things that really affect our land values is the supply. There's only so much land for sale, and just as it took kind of that downturn, people were still able to receive pretty good rents, not willing to put it on the market for sale with prices being down off of the peak of 14. And we just didn't see much for land becoming available. So that did help to hold values. And we'll see as we move into this fall and in spring, which is kind of the peak time for land sales, what takes place, if we have more land coming available than usual, or what takes place there. Just want to work through an example of a land sale, and these are kind of split kind of from our budget and just maybe more of a longer term expense deal. And I did this after fertilizer had gone up, using right at a 200 bushel yield and a 450 price. So those are probably pretty good yields and pretty decent price on corn. At 55, and I think whatever that works out to soybeans then, so kind of a 55 bushel yield. And they're just a non-land cost. Both of them kind of shaking out at 250. If there was any other income that could be inserted there. So average of 250. I estimated property tax at 30. I think that might be high for South Dakota. So net after property tax of 220. And if it cost 12,000 an acre, that gets us, you know, right around that, not quite the 2% return that we talked about at the Land and Lending Conference. So I'm surprised that you know, I'm surprised they just had calculated this, and yeah, that's right where it drove it down to. And if we take our annual increase since 91, it runs at 8%. So if people have that extra cash, either in the farm community or outside investor has it and willing to hold on to it long term, probably a pretty good return. And then, you know, while that's pretty optimistic to say that it's going to stay at that 8%, even though it has done it, well, it's just divided in half. Still a pretty good alternative, maybe compared to some things that are out there. And I think the other thing is probably seen, you know, as we've had this, even though it came down, but pretty good return and cash wise, and a steady increase kind of long term on land. You know, people maybe see it as a safe investment and are willing to put it there if they have cash that's looking for a place to grow. So then I just did another one where we might be able to rent the ground, purchase that same land, and just start going to rent it, assuming 200 an acre. Gets us a little lower cash return, but still, when we add in that long-term growth, either at what we show or just as an example, I took it in half, still a pretty decent long-term return at this time. Now I'm going to switch up a little bit and just talk about some input prices that are increasing. And our big one, what we've recently seen is fertilizer. And that is really just taken off since August, just close to double. And here's kind of what I've discovered and what we're seeing, some of the causes, not necessarily in any order, but just a list of them. So higher crop prices, yes, can have an influence on that, a demand for more fertilizer. Now, this kind of came about in a time when we weren't necessarily using a lot in the United States at this time, but it would still possibly influence. Less prevent plant acres. If we look back, we're back to that 2018 timeframe of number of acres getting planted. 19 and 20 saw a lot of nationwide prevent plant acres, so more acres needing that fertilizer. Natural gas availability, I don't know that that's in the US, but it is definitely worldwide and in Europe for sure, where much of the fertilizer is produced. And the shipping costs. Shipping costs close to doubled per metric ton. China's restricting some of their exports and some of the tariffs. Oh, I got some, I think that was supposed to say government sanctions on Belarus. We had some sanctions that came in there. They're one of the large exporters of fertilizer that didn't actually apply to that, but it made the fertilizer industry nervous and helped increase the price. Oh man, I have them here. There we go. Sorry about that. So it creates that tight global supply. The other thing that took place is the International Trade Commission imposed countervailing duties on Morocco for phosphorus of 20%, and on Russia it varied what they would have to pay on as countervailing duties at 9 to 47%. And that was something that was started clear back in June of 20. So Mosaic brought it to the International Trade Commission that these countries were dumping fertilizer, and they were able to persuade them to put these duties on. Mosaic owns 63% or controls 63% of the market share of phosphates, and Katrina is about 29. So small hands or small number of companies that control that phosphate fertilizer business. So those are something. And then we had the hurricane in New Orleans. Not so much maybe damage to plants, but the electricity being out, and those plants can't work without electricity. Of course, when you have a widespread outage like that, it takes longer than expected to get those plants back up and running. So that was one of the things. And that would have been a time when they would be producing pretty heavily to get fertilizer out and pushed up the rivers for distribution in the growing areas. The other thing, low water levels for barge traffic up the river, and a lot of damage to ships that were parked down there, either off the coast or there was an example of one company that has 100 barges, and they only had 4 left that did not sustain damage. Well, if those held true across the industry, that's a lot of damage to shipping capacity. So we have pretty well, as an industry, driven trucking out of that market just by driving prices so low to try and get it hauled up here that most people quit hauling it. There was no profit left for the transportation or fertilizer by truck, so they just kind of withdrew. Here I look back, and it kind of combined 2 sources here. So the 10/6 of 20 is from Iowa, and according to the Ag Marketing Service, and then I called around and got local prices for 10/5. So not a real complete comparison, but just wanted to give you an idea of what has happened in the fertilizer industry. The one thing that's really tough for corn, and you're going to hear about this and already have been hearing about it probably, in corn, if we're using a pound of nitrogen per bushel, with any of the nitrogen methods of applying, we're getting close to $1 a bushel just for nitrogen fertilizer. And that would vary probably from 85 cents to $1. But that's getting pretty high we're not used to that. We've had, as commodity prices went down, these had also adjusted down, and now they've just really taken a jump and taken a jump quick. The phosphorus, you hear many concerns on actual availability of it, so that will come to play, and we'll see. And then potash also a fairly large increase. And there's what I picked up for propane and diesel price increases. With that being said, if we can do as Asha said, know what our costs are, invest in them strategically. So maybe we don't go full rate of nitrogen. Maybe we maybe our soil health has been good enough and soils are good enough. Maybe we're in a rotation that's provided some nitrogen, and we don't shoot for that highest yield, or we don't put the full 1.2 recommendation on that. We lower that to 1 pound per bushel, or even lower than that if we know our land is capable, or is, I'm not going to get into that, but most of the return is on those initial pounds of fertilizer and application. So we maybe stop if we got a limited budgeted. We work closely with our agronomist and soil test and apply that fertilizer where it's going to provide us with the most. Anyway, these buds, that should say 22 instead of 21. Sorry about that. But these are using, I took some cash bids for next year's crop that are out in central South Dakota, and you were getting and I used a pretty good yield. So we're looking at 220 or so on corn, and whether those are achievable, that's got to come down to farm level. If they are, whether we'll end up that way, I don't know. But so just things to think about. Costs have really increased. I think probably the big thing that comes about is that risk that we now have as we've invested in this crop. And if we don't get the return, if prices fall off hard on us, or we don't get a yield, then that's when we hurt. We're at $650 before land cost on corn, at least at $650. Like I said, I was probably down at 1 or 0.9, 0.8 here on fertilizer application. So not maybe a full rate and still expecting that higher yield. Soybeans were right at $400, maybe a little bit over, depending on your operation. So you got a lot at risk per acre, and just things to think about. I did go ahead and grab where we're in price discovery for corn and soybeans right now. And currently, I just looked this up this morning, that is $5.30 for corn. So we're about halfway through on the year, and that discovery, our harvest price, is at $5.30. So up above what our spring level was. So those that had yield losses will also get a boost for price too in crop insurance. So that can be helpful for those that had yield losses with the drought this year. Soybeans currently at $12.29. is what it showed. And there is where spring wheat settled out for its harvest price. Winter wheat was at 634, and the 2022 winter wheat is at 710. So those that are planting or finishing up planting winter wheat, their planting price, or projected price, I should call it, is at 710. Yeah, so know what you have, inventory, soil test, work closely with supplier, because it may actually become a supply issue, whether you can actually get availability. So develop a plan and budget your fertilizer use widely. Maybe some multiple scenarios. I think that's what I have for today. Oh yeah, I did find one woolly bear the other day, and the wide orange band, according to the old wives' tale, is a mild winter. But I only had one, so I didn't really have much of a comparison. I don't have pictures from previous years, so take that for what it's worth. There's contact information, and that's what I have.
Okay, well, thanks, Jack.